changed your strategic positioning from born digital, born agile to AI first, agile always. Please tell us more about this. How does this impact your operations and service offerings?
So when we started the company, it was founded on the theme of digital transformation, and our approach was born digital, born agile, and we looked as a digital native company. That held us really well and differentiated us in the market till 22-23, when you saw the onset of AI. And we've always been doing a fair bit of AI in the company, starting in 2013, 2014, more on AI, ML, NLP. We started doing work around automation in 2017, 2018, and we were doing a little bit of Gen AI as well in 2019, 2020, as early as that in the edtech space. Once ChatGPT took over the world by storm, we created GBS. So GBS was looking at just generative AI. We had analytics and AI COE that was doing the AI, ML, NLP, another data engineering. Automation, DPS started doing more of intelligent automation. And over the last year and a half, what we've seen is customers demanding that we use productivity tools like Cursor, Copilot. We adopt an agentic AI approach to modernization and to the software development lifecycle. And all of these initiatives were happening in the company, but in a siloed manner. And we felt that given the potential of AI for the Indian IT services industry, as well as some of the challenges it poses, it would be good to pull all of this together under one umbrella, with with one leader driving this, but with multiple leaders within the company taking responsibility for each of these initiatives. So we'd get a coherent strategy cutting across the different areas, allowing us to build capability and deliver to customers in a seamless manner.
Hi Joseph, morning. This is Shrishti also joining in, but believe that every day is a new day with respect to the AI developments. What's your view on the recent Anthropic tool that really triggered a sharp fall in the Indian IT companies as well, and globally as well? We have seen that impact happening. And how will this impact the industry going ahead? What's your sense on that?
So, when I look at the statement, I can't help but say that there is a little bit of a self-interest in making a statement like that to promote one's own platform. You see other, AI leaders as well making some statements. Our belief is that AI as such, and even the co-worker offering from Anthropic, offers opportunity to the Indian IT services industry as long as we are focused. If you look at some of the offerings that they've talked about, whether it's legal or any other areas, there is still a need for a external provider or within the company, depending on whether the company wants to do this work internally, to understand the processes, the approach, the different players, and to map them back into the co-worker agentic AI model that is there. And you also have systems of record. They're not going to disappear. What do you do with all the data you already have? And where does the new data go? All of these aspects have to be considered. And I believe that it opens up an opportunity for the Indian IT industry to actually look at a new breed of applications that can drive growth for the industry and take them out of the current, I would say, I won't call it a slump, but the current, low single-digit growth that we are seeing, as opposed to the high single-digit growth that we had just a couple of years back.
Okay, point taken. And shifting focus, Mr. Venkatraman, last quarter you mentioned that you were expecting a seasonal uptick in the Artha banking deals in Q3 and Q4. Could you give us an update on that, and at what specific client behaviors or budget cycles in banking, what is driving this trend right now?
We are seeing decent traction in Artha deals. Like I mentioned in the last quarter, we did have ideas to close close to $1.5 to $2 million between Q3 and Q4. We have closed about 1/4 of it, with the balance getting shifted to Q4. So we are looking to complete the transactions that are at various stages within our customers, because you're being a product which has quite a bit of it brings in quite a bit of change at the customer end. It needs to go through a sales process which is more than 6 to 9 months in its cycle. So hopefully we are hoping we'll see the culmination of all of that happening in Q4, and our growth numbers for Q4 depend a little bit on closing some of these deals.
All right, good to know that. But Mr. Venkatraman, help us with the future outlook. How do you see the company's financials, especially in terms of revenue and margins, going ahead, especially in FY27?
So I would first hold on to, the double-digit growth that we have held out for this current year. We are in line with that. 9 month over 9 month, we are doing about 10.2%. So the effort will be to make sure that we continue that for the fourth quarter. We have also made a certain long-range statement in terms of saying that we'll hold our double-digit growth in constant currency for the next couple of years. So, the forecast in terms of revenue growth is out there. As far as bottom line is concerned, for the current year, the EBITDA range that has been guided is 20 to 22%, and we are today at about 20.4%, so well within that range. But like we have said in our press conference today, the AI first, Agile Always positioning that we have taken has to start showing results in terms of accelerated growth. We'll come back after our fourth quarter results and give you a view on how that's impacting or how it'll again drive growth further than what we are currently forecasting or guiding.
All right, so stick on to the double-digit guidance that you've already given. That's good to know. But with this, Joseph and Venkatraman, we let you go. So good having you on the channel today. Thank you so much for your time.